Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning. Happy Monday. Hope you had a good weekend. Thoughts on Friday. We had two sources of perceived dovishness, a slightly dovish move by the Fed. Article in the Journal by, they're calling them Nicky Leaks now. The author's name is Nick something or other. But he wrote an article cautioning about the pace of rate hikes and the effect that can have on the economy. And then you had a regional district Fed president, I'm forgetting the name right now, but one of the big ones, one of the voting ones, arguing that essentially is the same thing. We go too fast on rate hikes, too much. We don't have a real chance to evaluate how these rate hikes are having an effect on the economy, which is a good point. And we run the risk of just driving this thing into the ground and hard recession, what have you. So those things got the market juiced on Friday. The pullback in the dollar was a big help as well. Dollar up a little bit this morning, just because the United States continues to be the best house in the neighborhood. You got President Xi over in China really tightening power over the weekend over there. Our currency versus the yuan is just going vertical, so that's not helping. So we got a little bit of an up move in the dollar this morning. The other thing that's interesting is it's just energy commodities just can't seem to get out of their own way. They just continue to act heavy. You got flights are resuming out of China Southern Airlines this morning is resuming some flights. That should be bullish on the margin. You got the idea of China really reopening, but these commodities cannot get out of their own way. U.S. WTI acting pretty heavy this morning. Natural gas not as bad last time I checked. Maybe that's trying to find a bottom near term. But either way, that does kind of pave the way for oil service for new money in the space, if that is your intention. Not as price sensitive as obviously drillers or what have you would be. Awesome quarter out of Schlumberger. They pretty much raised guidance for next quarter as well in the call. So Schlumberger, Halliburton, OIH all look good. I think and you're getting probably a little bit of a pullback here today, just because they had a huge move on Friday, and you got a down move in crude this morning, so it could be an interesting time for an entry. Midterms coming up in another 15 days or so. More and more, I'm reading more and more. The GOP is recapturing that lead they had earlier in the year for a potential big victory there. That would be very market friendly, obviously. It still feels like this market wants to rally. Mike Wilson still calling the rally in place. He's the big bear over at Morgan Stanley. It just seems so fragile to me in a way, but so many folks kind of need it that I think in the second it starts looking like it's going to run in earnest to maybe 3,900, 4,000. It's just going to go. But we'll see. And the career-saving trade has not emerged yet. I'm very much on the outlook for the career-saving trade. I'm not sure where that's going to be. I thought maybe gold, but it just continues to sputter and sputter. So we'll see. Yet to be determined. Have an awesome Monday. Talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, Please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.